You were listening to chartingwealth.com for Wednesday, the 18th of July, 2018. We have received massive book orders. Thank you very much for your support of Charting Your Way to Wealth. We also, as promised, recorded over the weekend the short chart training. We emailed out links to everyone who purchased the book. I did get 3 kickbacks from people who gave us bad email addresses, or perhaps they've changed. If you are a book purchaser and did not, now first, please check your spam filters. It's coming from Charting Wealth. Make sure that you search that first if you didn't see the email. It is there. We've sent it out to everyone. We had 3 people of the many who purchased the book whose email addresses are no longer valid, or perhaps they put it in wrong when they entered it buying the book. So please check. If you still cannot find it and you are a book purchaser, please go ahead and send an email to chartingwealth1@gmail.com. That's the number 1. Chartingwealth, our name, 1@gmail.com. And we will make sure to give you the link in case your email address was bad. And I've double and triple checked them, and the 3 that didn't work are exactly what was put in, so it may just have been wrong. Anyway, if you still would like to order the book, we're going to have another special training coming up on Bitcoin and using our special Bitcoin chart. If you've not learned how to chart Bitcoin, we're going to do a special training on that for you and try to help you in understanding how to look at things like Bitcoin, cryptocurrencies, and how to chart them. So again, we are an education firm. We're not a stock calling service or a Bitcoin calling service, but we want you to understand the concepts and the things that we do here. And that's going to be our next treat for folks who purchase the book. So again, if you've not purchased the book, you need to. There are links on everything. If you look at the daily market review, the weekly reviews, if you look at the emails that you get every day, those of you who are subscribers, if you're not a subscriber, you need to be one, because that's how you get so much of the information we have to hand out to you. Just go to chartingwealth.com. Look under the daily postings there. You'll see links to how to buy the book, also at our YouTube channel. So let's jump into the markets for today. We see the S&P 500 and the Qs up. We see a TLT and 20-year bonds down. I'm sorry. Well, TLT is 20-year bonds. Gold down. Gold down big. So we'll talk about that in just a minute. S&P 500, remember, we're in confirmed up moves on the weekly and the 2-day. Derivative oscillator gaining momentum. Price percent oscillator gaining momentum, heading up. And we see that the candle for the week so far, the first 2 days, is heading up quite nicely. Price movement well above the weekly and the 2-day trend line. Let's check out that 2-day trend. What do we see? Price movement well above that as we end a, gosh, what is that, 5 candles of up movement, 3 candles after we had, well, with that vertical crossover on the 2-day chart going up. Quite nice. See the price percent oscillator heading up, derivative oscillator gaining upward momentum. What do we see on the 4-hour chart? Well, the 4-hour chart continues to move up. It sort of ran sideways and, in fact, didn't do much in the morning, but popped up in the afternoon to finish the day up nicely at 0.40%. 0.40%. Again, price movement well above the weekly and the 2-day. When we look at the price percent oscillator, it is heading up. Derivative oscillator gained a little momentum as it had been losing it prior. Started gaining in the morning and then later in the afternoon. So that's looking nice on the S&P 500. Now go back to the weekly. Let's check out what's going on the Qs, up 0.61%. It, of course, is another up candle as we see this week starting to form. Derivative oscillators a little more than flat. It looks like it gained a little bit of energy. Price percent oscillator heading up. Price movement above the 2-day and the weekly. We look at the 2-day chart. We've got 4 strong candles of up movement connected with that trend line heading up. Price movement above the weekly and the 2-day. we see momentum gaining quite strongly on the derivative oscillator, price percent oscillator headed up. As we look at that 4-hour chart, what do we see? Well, of course, we see that the derivative oscillator is continuing to lose momentum heading down. That was primarily from that strong down move in the morning, and then a nice up move in the afternoon, again capping it off at 0.61%, and really sort of turned around the price percent oscillator. It started heading up again after that move, but we did see, and we continue to see, some losing of strength in that derivative oscillator. So keep your eye on the price there, and again, remember price movements well above the weekly and the 2-day on that 4-hour chart too. So we go from the Qs and where things are there. Again, the magic of the weekly vertical crossover. It is there were those 3 weeks of some pullbacks, 2 stronger weeks of pullback, and then sort of that green spinning top for the week ending the 6th of July. And then things have started off again quite nicely. So we go from stocks to 20-year bonds. Now remember, 20-year bonds have been in a weekly vertical crossover since the 25th of May. Up strong that following week, ending the 1st of June. Sideways for the next 2 weeks in June. And then since then, until this week with some pullback, we have a weak spinning red top right now. There was 4 weeks of really nice, strong up movement, things doing quite well. Those of you who are doing your practice trades know that. However, this week has started off with a decrease in the energy, and the derivative oscillator, price percent oscillator, also is not heading up at the same strong angle it had been. Price movements laying right there on the 2-day and the weekly trend line. We look at that 2-day chart. What do we see? Price movement not penetrated, but laying right on it. Derivative oscillator losing momentum, has been since it topped back on the 5th of July. And now the price percent oscillator is heading down. So we ended this latest 2-day candle with a strong red, solid red down candle. So that is of great concern. We go from the 2-day to the 4-hour. What do we see? Well, of course, the 4-hour chart crossed over going down after it sort of popped up. It crossed over going down back on the afternoon of Monday, the 9th of July, and then was down for another day, and then started moving up, but never had the energy to pop over the red signal line, and then retreated and went right back over it and continues in its down moves. Price is still above that 2-day trend line and the weekly, so that pullback is still underway. Let's wait and see if indeed there is a crossover going up. Since the 2-day and the weekly are still in confirmed up moves, we might have a jumping in point, but we haven't had it yet after the rollback started. So we'll keep our powder dry, see what we see, and see if there's a potential trade again in an up move on TLT. Lastly, we go to gold. Now, gold has been in a confirmed down move for many, many weeks now, many months now. Of course, that started in mid-March the following week, so we never had a jumping in point because it started moving up for the next 5 weeks or so, and then in earnest started moving down on the week ending the 27th of April, and but for 3 spots has moved down strongly since then. And of course, we have a nice, we had a nice, decent trend line that was connecting 3 weeks of movement. This week started off a little higher, but has since moved down quite strongly, pushing through the weekly trend line and the 2-day again. Derivative oscillator gaining downward momentum. Price percent oscillator headed down quite strongly. Look at the 2-day chart. What do we see? Again, looks quite nice. Price movement is below the weekly and the 2-day. Derivative oscillator gaining momentum. Price percent oscillator heading down. And what's up on that 4-hour chart? Well, of course, we had a jumping in point when it crossed back over on the morning, at the end of the morning on the 13th. It would have been in the afternoon on Friday the 13th, and it's done quite well with continued down movement with a short in gold. How low will gold go? My friends, we don't actually know. We have seen gold, though, however, in the past, stop somewhere at about the 117 level, but again, it's dropped off from there and maybe somewhere flooring around 114, 115. We'll just have to see. We'll continue to watch, but again, gold's looking quite nice as it continues to pare down. So again, we've seen that coming, and of course, hopefully you have been playing that, done quite well in the short. That's where we are. Folks, again, if you haven't purchased the book, please do so. All those folks there at the end of the offer who bought all the books, we so appreciate you. We're getting those out to you as fast as we can. And, of course, that special training. And if you want the special Bitcoin training, you need to go buy the book. Charting Your Way to Wealth explains everything we do here. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.